Wall Street trying to assess the potential economic impact of the tariffs that are going away and the tariffs that are maybe staying and on the way. Senior economics reporter Steve Leisman joins us with the latest. What are you hearing, Steve?
Well, it was an interesting weekend talking to lawyers and trade experts and economists. But with the end of emergency tariffs, with the beginning of a series of new ones, economists expect pretty much somewhat less inflation and a reduced hit to growth this year. But the impact will still be there. There will be greater uncertainty as we wait for how the administration ultimately fashions a new set of import tax measures. Erica York from the Tax Foundation, she wrote this weekend, the Supreme Court ruling was welcome news, but the economic pain is far from over. The Trump tariffs amounted to an average tax increase per U.S. household of $1,000 in 2025. Now with the IEEPA tariffs being ruled illegal, the president's remaining new tariffs will result in a household burden of $700 in 2026. Treasury Secretary Scott Bessent late on Friday said the administration plans to raise as much revenue through new tariffs as it did with old tariffs, but most think the effort will not quite succeed. Goldman saying the effective tariff rate will fall to 9% from 10%, saying 60 to 70% of the tariff prices have already been passed through the consumer, raising core inflation by about 0.7%. But economists don't think Goldman doesn't think there's much more left to pass through. Economists also don't see prices rolling back. Barclays writing over the weekend, quote, "We doubt that businesses which recently raised their prices due to tariffs will lower them back. They would likely wait for more clarity on the future tariff rates." And it's the lack of clarity that may take the biggest economic toll. Businesses now brace for a renewed period of uncertainty over what tariffs will be in place, over what time, along with, of course, potential legal challenges to these new authorities. Separately, NEC Director Kevin Hassett has publicly apologized for comments made on CNBC last week, where he called for New York Fed researchers to be disciplined after they found 90% of the tariffs were paid by U.S. consumers and businesses. Hassett, writing to Larry Kutlikoff, an economist, he wrote, "I regret suggesting the authors should be disciplined for their research. Indeed, I retract that suggestion. The authors of this study are all excellent economists. We differ strongly on this particular paper, but I did not mean to impugn their excellent reputations and regret my choice of words." As for the Fed, it's hard to imagine them doing anything but taking the administration at their word that they intend to replace the tariffs one for one. So the policy outlook unlikely to change when it comes to interest rates. And Andrew, this could be another round of legal challenges here, because this Section 122, as you know, that calls for the use of or declaring a balance of payments problem or crisis is something that's being disputed by a lot of people I'm talking to.
Look, even Neil Katyal, who we're going to talk to later, who was the lawyer who argued this case in front of the Supreme Court and won, meaning just this tariff case we're talking about. We're going to see him on our broadcast a little bit later. He made the point that the Department of Justice, in its own argument, effectively says that Section 122 might not be a path to doing what they're doing. So I think this is going to raise some really interesting questions. The biggie that I've been talking about all morning, Steve, that I wonder where you land on is not so much about the refunds or what companies ultimately do, or at least do in the short term, which is probably not much as they wait for all this to play out, is what countries that made large commitments to invest in the United States ultimately do, given that so many of them remain unfulfilled, and in so many cases actually not just remain unfulfilled, but remain unapproved by their own legislatures in various countries around the world.
Well, I think that's another piece of the uncertainty, Andrew. I'm going to go back to the drawing board, perhaps, on some of these negotiations. I understand that Europe is going to vote this morning to just stop the negotiations or the approval of the European-U.S. trade pact. I think it changes the essentially the negotiation and the leverage of the president. What's interesting to me, Andrew, is this kind of ties back. The president is saying that there are investors willing to put, or countries willing to put trillions of dollars into the country. Now he wants to go to Section 122, which is just a balance of payment problems. So I talked to people from the Bank for International Settlements last night, or former people from there, and a balance of payments problem is when foreigners are withdrawing their money. You have a run on the currency. You have a surge in interest rates. You have all kinds of problems and that we don't have if the president is right and people want to put trillions into the country. So it really all ties together that if these investments are being made as the president claims, and I think some of them are actual and some of them are exaggerated and hyperbole. But if they're being made, it's very hard to make the claim of having a balance of payments problem.
And that's going to be a very, very interesting issue. Having said all of that, you know, the other leverage piece of this, which we've also talked about a little bit this morning, Steve, is not simply using tariffs, though that was sort of the president's favorite cudgel, is going to be the defense issue, which is, you know, you think about Taiwan or you think about parts of Europe and NATO and the like. There is part of an issue about whether some of these countries, and by the way, some companies that may not even be seeking refunds, for example, because they are worried about retribution in some other way.
Yeah, I mean, I heard you talk about that. I think all of that is accurate. I think that's part of the negotiation, part of the relationship we have. But we start at another place here. And these Section 122 tariffs, I'm sorry to keep coming back to them, but they have this 150-day limit on them. So now you talk to a person on the other side of the negotiation table that has a different set of leverage, and that leverage is one that is potentially limited. Right. And again, coming back to this 122 thing, I keep talking to people, and they say they don't know if Congress does not approve to extend them at the 150-day mark. It's possible the administration could come right back and declare the balance of payments emergency once again. So it could go on potentially forever. So I wish, Andrew, that the administration would figure out or would incorporate in its policies the uncertainty that's created for business here. That you want to be able to order stuff from overseas, tell me what the price is, tell me what the tariff is, and I can go about my business. Now I think there's another round of potentially debilitating uncertainty here.
And by the way, just one piece of uncertainty that I think doesn't seem to be on the table is the idea that Congress is not going to, at least this is my impression, but maybe you think politically it's different, that when these 150 days are over, I mean, part of what the Supreme Court effectively said was, Congress, it should be your decision to make, and therefore that Congress would effectively have to approve something after 150 days if you wanted to use, either Section 122 or IEPA or something else. In this context, politically, especially ahead of these midterms, that does not seem to be, tariffs do not seem to be a popular thing in this country.
Right, but the problem becomes again, Andrew, can the administration just declare it again? And by the way, there's a whole bunch of other declarations that are coming or may have already been made in Section 232, Sections 301. They're going to be using a whole range of by the way, Congress has ceded a lot of tariff authority to Congress. It's just what was the Supreme Court declared is they couldn't use this particular IEPA tariffs in this case. But there are many, many ways Congress, the administration can implement tariffs. It appears the administration will be using those measures, and we're going to have to sit here and wait for each declaration and how it does it. It looks like they carved out some of the initial exemptions that were in the IEPA tariffs, and those pass over into the Section 122 tariffs. We'll just have to wait and see, and then we'll do more and more of this analysis to try to figure out what the ultimate impact is on inflation and growth, Andrew.
Yeah. I mean, we're still waiting, Steve, and there's a lot of people that think that the axe will eventually fall on inflation and everything else. But I just, debilitating uncertainty will continue. I don't think the administration would use the word debilitating uncertainty for American business. That we just went through an amazing earnings season. The market's at new highs. It just hasn't. Maybe we're waiting for Godot. Maybe it happens, but I just don't feel the debilitating uncertainty that you're saying that companies have felt since Liberation Day. Maybe for the first week there was debilitating uncertainty, and then it all reversed itself. So it'd have to get a lot worse than what it's been up to this point.
I know a number of CEOs who think that they made a big mistake, by the way, already with some of the supply chain stuff.
Okay.
I'm just.
I know. I'm just saying that markets at new highs.
I hear what you're saying.
The worst case scenario
from the stock market,
has not come
from the stock market point of view.
Earnings.
Well, that is the stock market, right?
Not necessarily. Well, you just said the debilitating uncertainty for companies. Where are you seeing it in either the stock market or the company's results?
Well, when you talk to people, Joe, who talk about the idea of trying to program their systems, Joe, we've had intraday changes in tariffs. We have had a period of time where the uncertainty about what the cost is going to be of fairly critical inputs. They have had exemptions.
No, I understand,
Joe,
Steve. You know what I'm saying.
Administration.
We'll call up Santelli and we'll call up and Santelli. Then it'll be fair. Me, and Santelli against you. And how will that be better?
That's what you need. You need two against me. I get that. I'm that good.
Steve, let's stick with this because
we got to move on to Scott Gottlieb.
We'll get to Gottlieb in a second.
My only point was that it has been debilitating.
This is the biggest story.
And Scott Gottlieb is going to talk about its effect on pharmaceuticals.
I understand that in the whole, but this is the biggest story of the year, possibly of the decade.
You knew it was going to happen.
No, but I'm saying the tariff story, broadly speaking, what this president has done with tariffs has changed the entire global trade landscape.
Well, we did it in his first administration, and then Biden left him on, and now this is additional.
So the thing that I'm still just trying to understand that I wanted to go back to Steve about is the question long term. Let's say you get past these 150 days. Let's say you're able to implement other tariffs while this administration is this administration. Do you think, and this is the question I was hearing from CEOs about, which was, yes, their view is that the tariffs of some form will stay here, possibly for the next two and a half years. But that's different than being here for the next 10 years in terms of making big infrastructure investments and some of the sort of long-term investments that they're going to be making. And my question to Steve is whether you're hearing either the same thing or how you think that changes the dynamic.
Well, first of all, I want to go back to what Joe is saying. It is true that not every company had debilitating uncertainty. That is true. It is certainly more true for those involved in importing of products and where imports are essential. The president's policies are based on, are in part, a revenue issue, right? When they said, we're going to really replace the revenue. They didn't say we're going to replace the reasons for the thing being there. We're going to replace the revenue. There's a revenue component. There's also this component where the president is hoping to bring in manufacturing into the United States. Only a stable tariff regime can result in that kind of investment. And if you might recall, Joe, from the very beginning of this, I said, if the president wants to put tariffs on for that reason, he must go to Congress to create a more stable regime. And it was not a question of whether or not tariffs good, tariffs bad, but you want people to make investment, you got to have stability. So
because the next administration might not keep it. No, I understand. I understand that.
For the president's own plans.
Right. I mean, that's a perfect world, obviously, you're hoping for, because administrations change and we get whipsawed, businesses get whipsawed back and forth on all kinds of things, and not just trade and tariffs, but regulation Joe, and everything else.
This was supposed to be an administration that was going to come in and be very business friendly, and they have been in the sense of this accelerated depreciation and other deregulatory aspects. We've had this issue. We had Scott Lintz come on. I don't remember if you were there, from the Cato Institute, who showed the graph of if you're trying to follow the law and pay these tariffs, that you must be out of your mind to follow the rules here, because it is so complicated, so complex, so changing every day. And this is antithetical to the administration's own central initiative of deregulation and being pro and business friendly.
Right.